Alrighty guys, so step number one, first thing we got to do is calculate our gain or loss. You want to take a look at the fair value of the asset given up, the old, and compare that to the book value of the asset given up. Assuming the fair value is greater than the book value, then mathematically you'll have a gain. On the flip side, anytime the fair value of the old is less than the book value of the old, then obviously you have a loss. So step number one is always just do your math based upon the fair value and the book value of that old asset. Okay, so now what do we do if we have a gain or a loss? Well, let's start with the loss. As a general rule, anytime you have a loss, we'll recognize that immediately. There are exceptions, but high-level review, you see a loss, we think recognize it. Okay, what about if we have a gain? Well, do we book the gain? It depends. Do we have commercial substance or not? So if there's no commercial substance, then I need to know whether or not there's cash involved. We'll deal with that in a second. But if they tell you, hey, we have commercial substance, the future cash flows are going to change as a result of this transaction. So if you see that it has commercial substance, cash flows are going to change as a result of this transaction, then go ahead and recognize your entire gain. On the flip side, if there's no commercial substance, then I need to know, did you receive any cash? If you didn't receive any cash, if there's no cash received, then no gain recognized. Okay, if you didn't receive cash, but you paid cash, probably no gain recognized. I'll talk more about that in a second. Let's take a good look now at the cash received box, okay? If you get a little bit of cash, if it's less than 25% of the total consideration, then you'll recognize some of your gain. And we'll see examples in a minute with some math. But in your numerator is the cash received. The denominator is going to be the cash received plus the fair value received. Okay, so your numerator is the cash received, denominator is that cash received plus the fair value received. If that's less than 25%, you'll recognize some of your gain. On the flip side, you do that same fraction, cash received divided by the total fair value received, including that cash. Well, if that's greater than 25%, both sides are going to recognize the entire gain because then it really does have commercial substance. Okay, so if it's greater than 25%, both sides to that transaction will recognize their gain. Okay, let's look at some examples. All right, they tell us equipment has a book value of 500, fair value of 550. Stop right there. The fair value of the old, 550, the book value 500. Mathematically, we have a gain of 50. Okay, am I going to recognize that gain? Well, let's see. They tell me the exchange lacks commercial substance. So the key word is lacks. So that means there's no cash received, no gain recognized. If it lacks commercial substance and there's no cash received, then we're not going to recognize that gain. So we're going to take our old equipment off the books, 45-C gets credited $500,000, the book value, and then we plug, well, the brand new equipment we got, that's got to be debited as well for $500,000 because we're not recognizing any gain, lacks commercial substance, no cash received. Okay, let's take a look at our next example. All right, equipment 45-C, the old, has a book value of 500 and a fair value of 550. Stop right there. Fair value of the old, 550. Book value of the old, 500. So mathematically, we have a gain of 50,000. Well, am I going to recognize it? Let's see. We exchange that for equipment 65A. That's the new thing that has a fair value of 525, and we get cash. Look at this, guys. Cash is received, $25,000. Now they tell me the exchange lacks commercial substance. Okay, so I'm thinking now, what are my rules? Well, since I got some cash, some gain can be recognized. So you got to set up a fraction for me. In your numerators, $25,000, the cash received. In your denominators, that same $25,000 plus the fair value of what you received. So my numerator's 25, my denominator's 25 plus the fair value of equipment 65A, 525. So 25 divided by 550 is 4.55%. So we're going to recognize 4.55% of our mathematical gain of 50,000. So how much gain is recognized? 2,275. Always credit your old equipment first. Get that off your book. So the book value of the old equipment, credit that for 500. And credit your gain, 2,275. Okay, so I like starting with my credits. I'm going to credit the equipment, get that off my books, the old stuff, 500. Credit my gain for 2,275. Since cash was received, I debit that next. I debit my cash for 25,000. The very last thing I would do is debit my new equipment, 65A, that's a plug figure, 477,275. So that's the sum of your credits, $502,275, minus the cash received, $25,000. So to make my journal entry balance, I debit the new equipment, $477,275. Okay, let's take a look at another example. Okay, in this example, equipment 45C, the old, has a book value of $500, fair value of $550. Stop right there. Do your math. Fair value of the old, $550. Book value of the old, $500. Mathematically, we have a gain of $50. Well, am I going to recognize any of that gain? Well, let's see. We exchange it for equipment that has a fair value of $400, and we received a lot of cash, $150,000 worth. Now, they tell me the transaction lacks commercial substance, so I got to do my math to see how much gain will be recognized. If you got a lot of cash, greater than 25%, book your entire gain. Okay, so my numerator's the cash received, $150. My denominator's that same cash received, $150, plus the fair value received of that property, $400. So 150 divided by 550 is 27.7%. That's greater than 25%. All gain is recognized by both sides. Not only the party that received the cash, but also the party that paid the cash, because this really does have commercial substance in the sense that there's a lot of cash being exchanged here. So because it's greater than 25%, both sides of the transaction, all gain would be recognized. Okay, so again, step number one, what I would do is credit the old equipment, get that off your books, $500,000. Credit your gain, $50,000, all of it is recognized. We got cash, so we got a debit cash for $150, and then your plug figure is your debit to your new equipment, 65A, $400,000. And how would you back into the 400? Your total credits, $550, minus the cash received, $150, and that's your debit for $400,000. Okay, not so bad. Let's try some more now. Let's do some more practice.